So today I want to share with you why professional traders are making money while you're not. And first thing I want to point out here is the fact that if you're not making money now, it's not an issue. It's totally normal. You should not be discouraged by that. It shouldn't be something that brings you down or that you complain about every day or something. Not making money trading is normal. It's part of the process first. You gotta go through a phase where you're not making money first to be able to learn how to make money. It's just part of life, part of everything. You'll see that people who are great in any field, trading included or anything else, they go through first of all not making money, but then they learn the right thing, and then they make money later. So sometimes what I found is also the fact that to go from, let's say, break even in trading or not profitable to making money or being profitable, it takes just a few tweaks. You don't have to reinvent the wheel. You don't have to work harder. You just have to kind of make a few tweaks, and that will help you to get back on track. So if you're not subscribed to the channel yet, if you haven't clicked the subscribe button, do it now so you'll be notified of future videos. I'm working really hard to bring you tips like this on a daily basis and things that will help you become a full-time trader eventually. So today we're live. If you want to use the chat, feel free to do so. I want to hear your comments and your thoughts in the chat for sure. And if you're not watching this live, if you're watching the replay, just comment in the comment section. I'll be happy to help you out and answer your questions and do whatever I can to help you out after this is done live. So like I said before, I've been trading Forex since 2013 and I went full time in 2017. Now, I didn't made any effort first to kind of be a pro or trade like a professional. I basically was doing whatever I wanted to do. I was looking at the chart. I was trading different strategies. I used to, this is kind of stupid, but I used to, when I had free time, let's say like on a Friday afternoon or whatever that is, sit down in a coffee shop and trade, right? But I had no plan. I had like an idea of strategy in mind. I had no plan. And I was sitting there for like 3 hours trying to trade and make money in the market. Of course, that didn't work, right? You see why probably. If you have some experience now in trading, you see why. First of all, no strategy that I had back then. I had no clue what I was doing. But also, second thing is that, well, you cannot force the market to give you money when you sit down to trade the market, right? You got to be there when the market gives you setups, and we'll talk about this more later for sure. But the principle is you cannot just expect the market to give you profits whenever you want. Like it's not, you don't like sit there. It's not like a machine you start and then you make money, right? You cannot just decide whenever you want to start it. You got to be there and you got to be putting the work or doing the right things when you need to do the right things and just whenever you feel like it. That's the first thing. But when I went full time in 2017, it's because a few things changed and I took it more seriously. Okay, and we'll talk about exactly what in this live stream, this video today. I'll have 4 points for you about things that I've done and changed to become a better trader. And it's also why the professional traders out there make money while you're not. Okay, that makes a big difference. So it's not, I didn't change everything and then like reinvent myself completely, but I tweaked a few things that made a big difference. First things first, the first one is this myth. There's this myth out there all the time that you have to trade like the banks, and people say, well, if you want to be successful, learn to trade like the banks do. Okay, I found this to be honestly just a marketing tactic. The people say this because they want to sell you something. People want to trade like banks, so why not say that? And then you'll buy the product or you'll buy the course. But in reality, you don't have to trade like banks. Banks, they have rules, they have parameters they have to follow. They need to move money around for clients. They need to do many things that you don't care about. You don't have to do it. Okay, you don't have to be there and do what the banks do. It's ridiculous, right? You can trade. The thing is that traders and banks, right? They have their own style. They do their own thing, and that's what makes them good. Okay, so first things first, you don't have to trade like the banks. You just have to find a style you like, and then you have to be the best at that style. For example, for me, I like reversals. Reversals are my kind of go-to setup, the thing I like to trade the most. And that's just what I follow in the market. Now, that could be different for you, right? You could be trading trends if you want. You could be trading breakouts. You could be trading reversals too if you want. The principle here is that you want to be picking one style and you want to make this your kind of go-to setup, like something you're the best at. If you're not the best about your trading style and what you're trading strategy, if you don't know the ins and outs, you're not going to be good at trading for sure. You're going to have issues there and things won't go well. So that means that you should know your strategy, like what it is, when it works, when it doesn't work, what's the best setup, what's the worst setup, and all these things you should know them by heart. You should know the result, the stats. If you're the best like that, if you become the master at your style, you will be performing much better. You'll be a lot better than other people. Most people, they just copy a strategy they find online, they copy something, and then they use it, right? But you'll see clearly here why that doesn't work, because of the fact that you cannot just copy someone else. Imagine if like you had like, well, you see this, and I don't think this example, that's kind of like yeah, I'll take an example. So think, for example, you have like companies, right? uh Take like Apple as a company. Okay, Apple, they produce different things, they produce iPhone, they produce different products. What if someone was just like copy what they do, right? Just like copy exactly what they do, the same operating system, the same thing, and then try to sell it, right? It probably wouldn't work, right? Because the fact that, well, they copied the same company, they're not the best at it. They don't, they didn't do the research to be able to know what works, what doesn't. They didn't like go into things. They didn't design anything. They didn't have a team to design stuff and try different things and fail and try and then do the right thing. So principle here is the fact that if you copy other people or copy other people's strategies, you won't be the best at it, and that means that you won't be able to improve it, and you won't be able to to do it right. Okay. By the way, yes, we're on YouTube here. I just didn't look at the comment yet, but if you guys have any question, I'll be happy to answer your questions. I just want to get through this first so we can know, like, give some tips, and then if you have any question about this, let me know in the comment or the chat, and I'll be happy to help you out. And welcome for Sizzle and other people watching on YouTube. Awesome, maybe a few questions. That's perfect. Thank you, guys. So okay, so that's the first thing. You need to be able to become the expert at your own style. Second thing is, and that's a big one, you need to understand in the market when you're wrong, and that will dictate your whole strategy, everything you do in the market. You should know when you're wrong. And so for me, I know in the market, I can look at the chart and I have a point where I can put my stop loss, right? That is where I'm wrong. So most people put a stop loss that's just like without any background, without any like thing to support the stop loss, in the sense that if you put a stop loss at 50 pips from your entry, who cares about 50 pip? It doesn't really matter, right? So what you need to be able to do is put your stop loss where you're wrong. And that's, I can show you an example on the chart later if you want, putting your stop loss where you're wrong. But for me, that makes a big difference. I know if price hits my stop loss, chances are most of the time that price won't go back my direction. Okay, that's because I know when I'm there, I'm wrong, and the setup just won't work. Now, if you put your stop loss in a place that doesn't make sense, either a place in the chart where you feel like it, or you put your stop loss where, I don't know, you put your stop loss like 50 pip, 10 pip for your entry, or 100 pip, or whatever, that doesn't really matter. Okay, so two things you can do to place your stop loss better is, one, you use the ATR. ATR doesn't work well for me, but I'm saying because you can use it, it works for some people really well. So use the average true range to find out how much the pair moves in like a period on average, and put your stop loss beyond that. Okay, you can do 1 time ATR, 2 times ATR, 3 times ATR to put your stop loss. You gotta test this out, of course. Right? That's for sure. That doesn't work for me, but it could work for you if your strategy is different. The second thing you can do is you can use a place in the chart, right? A high or low, something of the sort. Always put it beyond the high, beyond the low. Or it could be just like a support resistance area. So you put your stop loss beyond a resistance area. Works super well in the market usually. So that's the second thing. If you don't put your stop loss where you're wrong, you'll be stepped out way too often. And that just won't work well for most people. The third thing that I want to share with you today on how, why professional traders make money and why you're not, is the fact that they don't listen to predictions, opinions, or what people think of the market. Now, you see this these days everywhere on social media, on Instagram, which is not the place to get trading advice for sure. You see this on YouTube too, where people make predictions about the market. They say, oh, this pair USD is going to 1.40, or oh, this pair USD CAD is going down to 1.25, right? Well, first of all, any prediction you make about anything, you're going to be like half accurate, 50% accurate, because the market is kind of like random. Like, you cannot know where it's going to go exactly. You can predict something, but it doesn't mean it's going to go that way. So what the pro traders do, and every trader that I've interviewed in the past, everyone I talked to, all these successful traders out there, they all have a plan, a strategy, a setup, or something they follow, and then they enter when the market tells them to enter. And they don't listen to predictions. They don't get influenced by what someone says on Forex Factory or what someone talked about in the news. It doesn't matter, right? Many times when I was learning to trade, I followed other people's opinions, whether that is on TV or on blogs or whatever. And I was like glued to that. I would want to listen to their opinion to be able to be sure about my trade. I found out that they were wrong most of the time. Right? The opinions and the thing that people say online or even on TV sometimes, it's just to kind of entertain, but it doesn't mean anything. So you could be putting a setup, and you'll see that most people are like most of the best traders. They are contrarian. They don't listen to other people's advice or opinions. They do what they do, and that's it. And there's a quote by Jesse Livermore who says, "Markets are never wrong, but opinions often are." So that reflects everything. Right? Opinions, they are opinions. They don't mean doesn't mean it's going to be the truth. Even if someone's like really good at trading, doesn't mean that they know where the market's going. So you should be doing your own thing, and you should be there to do whatever you have to do. Put your setup in, put your trade in, and then go out and that's it. Okay, that's really important. There's so many opinions these days and predictions that get for sure get lost in predictions, and that won't lead you anywhere. So before we go in the chart, and I want to answer your questions, the fourth thing that I think is going to make a big impact for you in order to become a professional trader and someone who's making money consistently from trading is that you should in the market only trade when you have a clear edge. And that means that means two things. First of all, don't trade every day. Okay, that's useless. If you trade every day because like you want to show up and place trades within the market, it doesn't matter, right? You could have like 10 setup in one day and then no setup the next 3 days. That's normal, right? That's the market giving you some kind of randomness sometimes. So if you're there and you want to trade every day, well, the market doesn't care about you being there every day. And the thing is that if you place trades whenever you want to place trades or all the setups you find, then probably it's probably the fact that you're gonna like screw up your stats by quite a bit. Okay, the market cannot give you A plus setups every day. It's impossible. The market cannot be there to give you like really good setups on a daily basis, even on a weekly basis. Usually, what happens is for me at least in my strategy, there's like 1 or 2 days a week where there just like all the setup appear. There's like 4 or 5 setup, and they're all winners, right? Or most of them winners. Then the other days it's like back and forth and that good. You have a lot of losses, and that's what it is. Now you cannot completely avoid that, but you can for sure at least do it in a way where you trade only when you have a clear edge and not on all the days. So find out which days with your strategy are not profitable. Okay, for me it's Monday. Mondays sucks. They're not profitable. I always lose on Mondays, so I stop trading on Mondays. Find out what thing you have to see. You have to find out what things need to be in the market for your style to be profitable. Right? Maybe it's gonna be like you need to have a trend that is just strong. Maybe you need to have some sellers market that are that clear. And if it's not that clear, just don't trade that day. Okay, maybe you need to find these things first, and you need to be able to. Most people, when they kind of get better results in trading, they don't trade more. They trade less. They reduce the number of trades to be able to get better results, and that makes a big difference. So you want to be able to figure out when you trade at your best, when you set up appear and are the best in the market, and try to focus only on that. Okay, you cannot be like 100% profitable all the time for sure. You can have days and weeks perhaps when it's losing, when you're losing money, but that's fine. Okay, the goal is you always want to be improving and becoming better. Okay, that's the principle. So that will make a big difference. Now don't forget that you have a big advantage here compared to people that are professional traders and trading for big banks. Okay, the people in big banks, if they show up at work and don't trade for a week because they have no setup, the manager is going to be pissed off at them, and they might get fired, right? Because they don't place trades in the market. They're hired, and their job is to place trades, so they have to place trades almost every day. Even if the setup is not there, they have to trade. They have to show the firm that they're there and placing trades, right? But you as a retail trader now, even if you're a professional trader by yourself but you don't trade for a bank, you have this advantage of not having to trade every day. You can trade 1 day a week if you want. You can skip a week if you want. You should look in the market every day. You should be able to kind of open your charts every day for sure. I believe in that a lot. I open my chart every single day, but it doesn't mean I'll trade that day. I could be taking 3 days off because there's no setup in the market. It doesn't matter. Okay, but you have this chance as a retail trader, as someone trading for yourself, or even if you trade for small prop firms, for a small prop firm, you have this chance to not trade every day, which is awesome because you can have much better results by doing that and being selective with your trades. So how that makes sense? Type yes in the chat if you want to use these tips. Let me know if you want to kind of use these tips in the future, if you think you will use them. Type a yes in the chat. I'll be curious to hear who wants to use them and who doesn't want to use them. I think these will make a big difference for anyone. But if you have any question about this, you can let me know in the chat as well. And I'll be curious to hear your thoughts. Now, I do want to take some time to go over the chat, and I will try to, I don't know if I can pop up this here. Let's try something actually. That would be pretty cool. So because we're live, why not answer some questions? I'm gonna change this out. Actually, that could work well. Let me see if I can do something here so that we don't see the whole thing. Not that. Some Windows capture, that could be good. Yeah, that's awesome. Let's do that. Awesome, perfect. Okay, so what we'll do is we'll make this bigger. So guys, for that delay, we'll take this bigger. As you can probably see, I like to go live, but I don't really use any kind of technology there. So let's try to make this nice somehow. Perfect, awesome. So now you guys can see the chat. It's gonna be better because sometimes I have the chat, but then I read the chat and I feel like no one understands, or also because of the fact that you might not know what I'm reading or talking about. So much nicer if you see the chat. Now it's gonna be dizzy for a few seconds here. It should get back normal. Awesome, perfect. I think that works fine. So let me try to read the chat over here and answer your questions if you have any question about that or anything we talked about. So JD says, when do you know a reversal is coming up? Reading this one here. When you know a reversal is coming up, what is your confirmation? Do you wait for it to break a horizontal level or retest? Okay, good question. So yeah, what I do is I have it set up with the Bollinger Band. So I use the Bollinger Band to kind of, well, two things, so Bollinger Band and price action, right? The best thing is you want to have a range. So you need to have a clear range in the market. So support, resistance areas. And that's where you should have a reversal, right? You know when price gets close to those zones. Now, the second thing is you need to have a setup. And the setup is Bollinger Band. So you use a simple Bollinger Band, 20 and 2, so 20 period, 2 standard deviation. And then you just wait for price to break the Bollinger Band and come back with an engulfing candle. Okay, that means that price is pushing up, trying to break, but coming back and the sellers are on control. Okay, that's like for a bearish setup at the resistance area. So that is the principle. And if you follow this, then you should be able to have a pretty good trade. That's my confirmation. It doesn't work all the time for sure, but it's pretty good to have good trades. So if you want to see an example of that on the chart, I can give you one. Just let me know in the chat, and I'll be happy to do an example on charts if you want. Okay, cool. Let's see. How does the knowledge of equity transfer to Forex? Good question. For Sizzle. So it's definitely similar. The fundamentals they work out for sure. You can like, apply fundamentals about the market, the equities to Forex a little bit. However, and the strategies too, they're going to be pretty much the same. Okay, the only thing you need to think about is the fact that the strategies might not work exactly the same out of the box. You might have to tweak them a little bit. You might have to adjust them a little bit so that they work. But being a equity trader is definitely a good start to be able to go into Forex, but it's not a perfect solution. You got to be able to tweak it, adjust some things before you go to trade Forex. So he says I do options, stocks, but I've yet to do Forex. Okay, cool. Yeah, that works fine. Trader Duck says looking to get funded day or swing for better odds. Thanks. So this depends on the preference. They have, like, they have preference now popping up everywhere in the trading industry. They have FDMO, they have 5%ers, they have City Trader Emporium, they have Funding Talent. They have a lot. Okay, they have LST Capital. So the point here is you gotta find the right prop firm for your trading style, and they're gonna fund pretty much any trading style you could do. Okay, unless you have big drawdowns and small return, which you shouldn't have. So you just have to find the right one. If you are a day trader, you better go with FTMO. If you are a swing trader, you better go with 5%ers, or these are ones like Trader Emporium or Yeah, the other ones are similar. So it just depends on what style you have, and you should be good to go. First is also someone please explain me the areas of frustrating over something like stocks or options. The cool thing about Forex, which I really kind of like, I didn't think on this first when I began trading, is the fact that it's open 24/5, right? 24 hours a day, 5 days a week. So the cool thing is you can be anywhere in the world. You can be in Asia, like I'm at now in Bangkok, or you can be in Canada, and you can still trade in your day basically. So you don't have to be like up at night. I know some guys here in Asia trade stocks, and they have to trade from like 10 p.m. to like 2 a.m. or something because that's their hours of trading, right? Because they have to trade the session in the US. So not a good thing for lifestyle, not really practical. That's why I like Forex better. You can trade 24 hours a day. For a beginner, Forex is having a much better entry parameters. You can enter Forex with less capital than stocks in general. That is a good thing if you're a beginner. If you want to kind of put not too much money in Forex, you can try it. That's good. That's pretty much the reason why I began trading Forex in the first place, if you're like many years back. But that could be a good thing. So it kind of depends. The other thing is, well, yeah, I think that's pretty much it. You have a lot more currency pairs in Forex. In stock, the issue is the fact that when like you have to follow the industries, right? So when one industry is down, all the stocks in that industry are down. So that can be an issue. You have to kind of maybe have it counted. So many stocks to look at. With Forex, you can have like many pairs, but they're all easy to go through. Like there's not like 1,000 pairs. There's like only 60 pairs or something that you can trade, and that's even pushing it like to a lot. So less things trade, that's good because you can filter better. It could be a good thing. Also, Forex tends to trend more, but it could also be like sideways for a while. So that depends. Pretty much the same as stocks. But stocks are usually breaking out faster. It kind of depends. Um, OPN trading says it's risking 0.5% per trade. Good. That depends on what your objectives are and what your rules are. If you trade for a prop firm, that might be too high. If you trade for yourself, that could be enough. Again, it depends on your win rate and your stats. If you work 18 hours a day like Elon Musk, we could be millionaires within months? Well, yeah. The only issue, yeah, maybe, but the only issue is the fact that in trading, you're not paid for the hours you put in as work. You're paid for the setup you take, right? So even if you work 12 hours a day, 18 hours a day, whatever, you won't take more setup, right? Yeah, you can take more trades, but your result won't be better. Like I said before, usually people who get better results in trading take less trades, they focus on their best setup, and they avoid the rest. So not really a good way to see it. Now, if you take these 18 hours to build algos and robots, yeah, maybe you can become better. Maybe that could be helping you to become a millionaire or whatever in a few months. But that's a different game. That's not the same thing as trading at 18 hours a day. So it depends. Mm-hmm. Okay, let's see if there are any other comments here. Okay, we'll have discussion here. 30 leverage is perfect. Okay. Yeah, okay. Well, okay, so I guess discussing about results, which is all right, it's totally fun. But think about the fact that in any case, right, when you see someone like talking about their wins and everything around, it's okay, it's good, but it's the fact that like wins don't happen forever. You might have a $2,000 account, you double it or triple it, and that's good. That's all good. You feel fine. But then if you keep that same risk over time, you will blow up the account eventually. And that's just because of probabilities and the fact that trading relies a lot on probabilities. So yeah, that's fine. And yes, we're alive for now. For OPE, awesome. Mm. Opus says, I took a free trial on FCMO and I failed the profit target by $500. I'm a higher time frame trader and there was no trading opportunities for me last week. Should I attempt the real or another trial? Yeah, that's a good question. So for you, Ope, you should do you should not go with FTMO if you're a higher time frame trader. You should go with 5%ers. FTMO, they have 30 days maximum for your challenge. 5%ers, they can give you up to 6 months. So that will give you a lot more time to be able to go through the challenge and take the right trades. So FTMO is a bit tight, even for me, because I trade swing mostly. It's a bit tight to be able to have enough trades in that time frame and to have trades achieved. So that would be a best way for you. Like I said, for swing traders, 5%ers is better. I can give you a discount if you want. Just let me know by email. I'll be happy to help. And yeah, that would be better. Trading for FTMO and risking 0.5% per trade enough for OPN trading? Probably not. FTMO is quite tight. I'm not sure what their drawdown is 10%, right? So if you have a 10%, yeah, that's 20 trades. Not that bad. Or it might be lower. I'm not sure, depending on which account you have and everything. So I would say might be enough, but it depends again on your stats. If you have a high win rate, that could be good. If you have a lower win rate, that could be not so good. A cool thing you can do is you can go to, let me just try to find that out. It's equity curve. I think equity curve simulator. There you go. So that's cool. What you can do is you can go to this website over here, which I'll just share my screen for now. This website over here, it's called Equity Curve Simulator, and okay, that's in German, but it's fine. What that allows you to do is it allows you to kind of put here your parameters, and you can put whatever you want here. Win probability, your win-loss relations, that's your reward to risk. Let's say we have a 2-to-1. Okay, and let's say we get closer to like a 46%, for example. A number of trades, 100 trades, okay. That's gonna allow you to kind of compare. Line's gonna do 20, that's fine. Risk per trade, you should do 1%. Scale normal. Yeah, you should do logarithm. That depends. So let's just do normal. That's fine. So that is gonna allow you to kind of see your risk per. So your equity curve based on your risk per trade and your parameters there. So you can kind of see how you would hit the drawdown. Okay. So the more lines you do here, the more kind of options you have, the more scenarios based on probabilities. Let's just say we put like 1,000 trade here, and we can compare what the results would be. And so that will kind of give you, well, yeah, that's good because like we have a large number, right? But in the short term, that's where you can blow up your account. That's the main issue there. So see, the worst case here is this blue line there, and that will bring you down to a 10% drawdown easily, right? So you want to find a way where, if you're comfortable with this, with losing your account there, right, on the blue line, that's fine. I mean, not blowing up your account, but losing your FTMO account, right? Because you're not gonna blow up your account for sure with those stats, but you will be basically hitting the max drawdown with FTMO. So if that's fine for you, then good. But in general cases, you want to be careful to not have too many lines within that kind of maximum drawdown there. Okay, to not lose your FTMO account, because that's bad. Here you can see more stats. If you go down, they tell you your Kelly ratio expectation, biggest max drawdown, 16%. That's too much for FTMO. Average max drawdown, equity. So minimum equity. Okay, that's good. Of course, you can change this amount here to make it more real. So that is it, and then this is important too. See, based on probabilities. Now, so you could do a back test, right, of your statistics, and you could see how many losses you have in the row maximum, and that will give you a good indication of what you can expect for maximum losses in a row. And then what happens is you don't feel bad when you have these losses. But the other thing is the fact that this is going to be based on probabilities. Okay, so based on probabilities, you can have maximum 9 winning trades and maximum 13 losing trade in a row. Now, don't panic if you get to 5 trades and you are losing 5 trades in a row. It's normal. It's part of probabilities, right? Part of these numbers. This is really good to be able to understand what you can expect from your trading and what probabilities could give you. Okay, so until you have 13 losses, it's just part of the plan. It's just normal. So that's something you should be able to just go with the flow. Keep trading the same plan. Make sure you don't have any mistakes and keep moving forward. Because that's pretty good. Now, if you change this, of course, it's going to change. So I hope that's helpful to be able to understand kind of your probabilities and what you do in the market. Then maybe if that's useful, like too technical, I'm curious to know if that's okay or not. Let's go back. Judging if small account would fail, how to grow a small account. So the only issue here is your risk was too high. That's it. If you have the same risk in a small account as a big account, like you want to have the same percentage on a small account as opposed to a big account. If it's 1% per trade, that's fine. Take smaller size, that's okay. Maybe you have to use a different platform than MT4. You have to use a platform you can put a custom lot size or custom unit number, and that will allow you to take much smaller trades, which will be really good to build your big account. Now, here's the big picture, right? And give me a moment here. So you have two options, right? And most people, they have a small account. They want to be able to grow it to a big account. Now you could do it two ways, right? First way is you risk more per trade, expecting to grow your small account to a bigger account, and that's fine. That's okay, right? It's a decent way to do it. The only issue is that this brings the risk of you blowing up your account and losing that account, or just not being able to let the numbers play out to have your wins. So that's the first option. But what if we take, and this is again the purpose of this video today, is to be able to take a professional approach. And the professional approach would be that instead of risking big on this account, treat this small account as a big giant account, as a like $1 million account. You have $100 in your account. That's fine. Right? Treat it as a big account. So risk small per trade, risk like a decent amount, and then you will grow it like a few percent, and that's good. Like maybe you grow it to 5% a month, or maybe 10% a month if you can. If that would be really good. But just 5% a month is enough, right? 5% per month, grow it to that amount, and then in a few months, apply for prop firms, right? You will go from that $100 account or whatever amount that is. You could get funding. You could get funded for like, yeah, you can even reinvest this profit to being funded. So you can get like a, I don't know, $10,000 account with that. You just did like 1,000 times your account already. Okay, 100 times your account. Yeah, 100 times your account. So that's it. Like you get funding from prop firms, then you go see some investors, you go see some different people. I have one of my students who did that, basically the same thing, and he began trading with his own money, with his own capital. Then he got funding for prop firms. He had to refuse it because he wanted to be able to build his own fund. Then he got to find investors by himself, private investors, which gave him like about $60,000. These investors, and he decided that after that he was good. He wanted to do his own fund bigger. He wanted to meet more investors, and now he's at like $600,000, which is insane. So that's the bigger picture view. Like if you see the bigger picture, you will treat your account well. You will treat it like a big account, even though it's a small account, which is not risk too much per trade. Keep it normal, and then you'll be able to get funded and grow this account too much bigger. Okay, that's the bigger picture. Now you gotta be able to see that, so that you're able to do the right thing now. Okay, that's crucial. If you want to pick the path of trading that small account and risking a lot, that's fine. I won't judge you for that. But if you want to make it full time, and if you want to make it to building something good and big, then I highly suggest you pick the way of getting like treated this properly, like a pro, getting funded, and then building increasing capital by a lot and making the capital much bigger with this funding you get from prop firms or investors or whatever that is. That would be a really good way to do it. So let's go back to see the chat here. In your opinion or experience, is the month of December good for trading as compared to January? Yeah, December for me is one of my best months overall. It's always a good month. in the past like 3 4 years been a really good month. So yeah, it might change, but it's been good, really good so far. There's like a lot of trades, especially the week before Christmas, a lot of trades, and they all go well. So it's surprising. I would think the opposite, that December would be a bad month because of the holidays coming up and everything. But for me, it's been a really good month overall. Yeah. Republic says, anybody want to donate to the brokers? Just enter the market blindly. Easy. Yeah, it's true. Um, are there any trading plans that prop firms like to see versus others? Yeah, prop firms, they want to see small gains, tiny losses, and consistency. So they want to see like small gains over time. If you have like these big trades and then you win a lot of money one day and then the next day it's like nothing, or you have big losses, that won't work. You want to see a consistent small up, and even though you don't make the target, that's what investors and everyone else wants to see. So you're going to be good with that. If you make small consistent gains, that's key. Uh, Pip Scobar says, what are your thoughts on compounding? What's the reasonable amount to compound weekly for a teenager? Mm, so does that mean with the profit in the market? You want to compound your wins? I'm not sure what the question is here. So basically, if you just follow a certain percentage per trade that you risk, then you make this in profit. Let's say you make 2% in profit, and then you do this like, let's say in a month you make 8%. The month you're going to risk the percent based on your profit on your overall account, so that we will compound. That's the only thing you can do. I don't know how else you want to compound your account. That's the simplest way. Um, JG says, I take 1 to 3 trades a week. Should I increase my percentage past FTMO challenge? If you take 1 to 3 trades a week, you should be doing 5%ers, not FTMO. Because like I said, 5%ers, they have a longer period you can trade. So you can trade up to 6 months with them to pass the challenge. So that's a lot. FTMO is only 30 days, right? The issue is the fact that if you take 1 to 3 trades a week, if you increase your risk, you might be blowing up the risk parameters, so that won't be good. So I highly recommend you go with a prop firm with more leeway and allowing you to kind of be able to trade for longer. If you know what's your average percentage a month, I do about this year. I've been doing about 5% a month. With a few losing months, I had a losing month in August and another one a bit earlier, I think April or something. But it's about 5% a month this year, which is lower than usual. But it's been a pretty crazy year anyway. Um, Kevin says, "What are your thoughts on trading on Mondays and Fridays?" I've covered that before. I don't trade Mondays now. I still trade Fridays. Fridays are good for me. Expe- ex- except yeah, they're good except for entering trades on Friday. It's good for like exiting trade on Friday. But if you enter trade on Friday for holding over the weekend, that's usually not too good. So you want to keep that in mind. But Monday is the day that I don't trade anymore because I'm always losing on Mondays anyway. So not a good day. Even with an algo, it's not because I make mistakes, because the market's different on Mondays. So even if I have an algo taking trades and managing everything, you're still losing money overall. So that's the principle there. Because you want to be careful with what days you trade. But best way to do it is just go on my FX book, right? You connect your account there, and you will be able to see a breakdown day by day of your profit. So you can see your win rate, you can see your profit between days of the week. You can even see hours of the day. So which hours are most profitable, which hours are not profitable. That can work out well. And same thing, yeah, something with Sundays. I don't trade Sundays. It's when the market opens. I never have any trades there, but that's normal for most people. All right, guys, I appreciate your time for being here. I hope you got some value with this. Give me a yes or a like in the comment section or the chat if you appreciate this video today. And also subscribe to the channel if it's not done yet. If you want to work with me, I've put a link below in the description. If you want to be able to get coaching from me and us working together, I can only take like maybe 5 to 10 people between for now between until the end of the year. So I'm very limited. We have a lot of students now in the academy that are getting results. So I don't want to take away from them. But if you want to work with me, then check out the link below. I'll be doing my best to help. And that's it. I hope you liked this video today. Give it a like and subscribe if it's not done yet. I'll catch you back here for the next video pretty soon. Ciao.